Hey guys, what's up? This is Andrew for TRENDLINES.com. So in today's video, guys, we're gonna go through AMC Gme price action. Not a good day at all. We're also gonna go through what is happening on the global market, triple Q, and as usual, guys, quickly we're gonna check what is happening on the oil market, which is very important, and on the US 10-year yield. Let's get into it. All right, so bam, bam, bam. AMC, guys, minus 7%. I'm here on the 4 time frame. Let's go on the daily time frame. So we are still, for those who watched the video I did yesterday, we are still in this wedge pattern. All right. A wedge pattern is just, kind of a, I would say, it looks like a triangle, but the difference between a wedge and a triangle is that a triangle is a corrective pattern. So when you move down, a triangle will have a basis that is going higher, all right? A wedge has a basis that is going lower and a resistance line, trend line that is going lower as well. So it gives us this kind of patterns. They are usually reversal patterns. Why are they reversal patterns? Because a wedge is characterized by the fact that the price action is slowing, all right? Which means that, as you can see, here we're moving sharply down, and here we are still moving lower, but slower. This can also be seen in the momentum indicators. So here on the daily time frame, we only see the momentum, so RSI or MACD, slowing, but we don't see it going up. So we don't have a bullish divergence on the daily time frame, but we have this bullish divergence on the 4 time frame. And like I told you guys yesterday, a bullish divergence without another bullish signal, such as a candlestick pattern, a breakout, a moving averages crossover, is not a signal that you can use for trading. I mean, you could, here for example, this is a good example. So it's not the perfect situation to do that, but another way to trade bullish divergences is just to wait for a support to be hit with the momentum going higher. So here we are on a support, which is the support created by the lower band of my wedge pattern, and we still have the bullish divergence. So technically I could set up a bullish order here with a stop loss just here if it was not AMC. Of course, AMC, we don't use stop losses, and to be honest, I personally didn't buy in this area. Because I'm waiting for a breakout. I don't want to take the risk to buy here when, let's be honest, we could still have more downside to come. When I could buy a little bit higher, but with a higher probability of reversal. So this is what I'm personally trying to do. So as you can see, yesterday I was telling you we had that bullish divergence, and still today we are dropping. Why? Because we didn't have that short-term bullish signal that we were waiting for. I told you guys yesterday, I did this trend line with you guys. I showed you how to do it. And quite interestingly, this morning, this is exactly where we had the rejection. So you could tell me that the 17 area, the 17 level was already a resistance, natural resistance. What I call natural is whenever it's created by recent lows or recent highs. As you guys can see here, we had 1, 2, 3, 4, 5, 6 recent lows or recent highs. So 17 was already a resistance, but it was also where I had this trend line coming. And right now, guys, we are in a situation that very honestly is looking like it's gonna reverse. All right, so I know that I've been saying that AMC will reverse, for quite some time in this whole move down. I was really hoping that at 21 we have this bullish reaction. We didn't. Since here I'm telling you guys that we are a bit neutral. The third wave, is still on the table, but the probability of a third wave has clearly decreased because bulls lost control on the long term here after we went below the 61.8% retracement of this first move up. Okay, I'm not gonna do that again. I did that dozens of times. Okay, I do it again. So you can see here the 61.8 was here, so it was even here, guys. So since we broke out below 21, we are not bullish anymore for now on the long term, and we are looking for a bullish reversal for this new move up to start, and we're gonna then see if it's potentially a third wave, which means that we could go to 70, or if it is just a correction of inside this whole move down, if it's just a correction on the way up, because we are here bearish, guys. All right, so in moves down, corrective moves happen on the upside. So the question we're going to have, once we finally, make this rebound, so once again, are we going to go to 13 before making it? I don't know. It really doesn't look like it. But for now, we can't deny that bears are in control on pretty much every time frame, guys. The only good thing, once again, that we have is this kind of good situation for reversal that we have on the 4 hours time frame. Why is it a good situation for a reversal? Because for a reversal to happen, we like to have a nice consolidation on low volume. And guys, a nice consolidation is created by multiple reactions on some supports or some resistances in a tight range, all right? I've been saying that for quite some time. I told you guys that the consolidation was here, then we moved lower. But here, once again, we've never had those bullish signals which we are looking for, which is a breakout with increasing volume. We never had it. I can tell you that whenever we're going to have it, just like here, the probability of a strong move up is going to be very high. For now, we don't have that, and bears are gaining ground. Once again, this is also due to what is happening on the rest of the market. But let me here conclude what we are looking for. And yeah, so here, first, this is a bullish, a reversal situation. But once again, as long as we don't have the breakout, the reversal is not that likely to happen. But we are in a situation where if this breakout happens, it's going to be easy to have it with increasing volume because the volume is very low. And now, yesterday, I told you that this trend line was not that perfect because I was missing some reactions on the short term. I have today one more reaction, so it's a better trend line than yesterday, and we are now really converging towards this, wedge, this bottom of the wedge. So let's see what's going to happen. We can also break out on the downside. It would not be nice, but it's still possible. It would depend a lot on what is happening on the rest of the market. That's why I will analyze Triple Q very soon. Here to conclude, there is one more thing I wanted to show you guys, is that I told you the 16.3 level is an important level because it's the breakout level. So you're going to tell me it was last month. Yes, but I can tell you that a lot of investors still remember that level because this is the level where big, nice things have started. So it's in everyone's mind. And right now, bears kind of offset this whole move up and we are back to this level. So it's important for bulls to show their strengths here. And today what we're having is a breakout below this level. Okay, so once again we're having a breakout. As you can see, this 4 hours candle went through the 16.3 level that acted very well as support the past 2 candles. I mean yesterday and the day before and Friday. And so it has been broken today. So it's not a good thing. But what I've noticed, guys, with AMC, and I'm sure you have noticed it too, is that we very often have a bear trap before reversal. Remember, guys, here the level was 14.5, okay, or 14. Okay, I've been having this level for a very long time, and I told you that at this level we should have a bullish reaction. Here we set up a few bullish trades in my Discord, and then we had here this breakout. I don't know if you guys remember. I was here a bit, really not happy because it was important that this level hold for what happened afterwards. And look, we had here this bear trap. So that's why now I moved my trend line here. But I remind you guys that we were like here. We had a close on the daily time frame below the 14 level, which was not looking good. And the next day, we started a massive rally. So usually when I see this kind of breakouts, so first the breakout occurs on low volume, so I should not pay too much attention to it. But if I had seen here a volume, I would have said, all right, this is bearish and we are likely to go to 13. But AMC situation is different. You guys know that many algorithms work on the stock and manipulate this. This market is manipulated more than any other market. So here it could be just maybe one more trap before a rebound. I don't know if it's going to happen. I'm just saying that if we manage to have this breakout here above this trend line with finally this increase in volume, guys, that we are looking for the past month, then it would be looking very good, and we would need to analyze what happens on the way up in terms of volume, in terms of volatility, to try to predict if we are gonna move strongly higher or not. But let's be honest, it's gonna be very hard to predict until it happens. All right, so if we go to 21, 26, this area, then I can tell you bears will start to be scared and bulls will probably gather their strengths and we could have some nice things happening. All right, but for now we're not there, guys, so we're looking for this breakout above the 16.8 level with increase in volume, and then we can see what can happen next. For now, the next support level, guys, is at 13, so let's see. I hope this is only a fake out. Then GME. So GME, regular scale. All right, what do we have here? Let me get rid of that. Okay, so we are here back to this level. So it was a little bit expected. We discussed that yesterday, guys, and I mean it was a bit expected that GME goes lower once again because we broke out below the 141.5 level, and we needed to find some more support at this important level that is 130, and I told you that we could have some access to 123, which is the 61.8 fib ratio. Right now we are below the 130 level, which is not looking so good, but look at the volume, guys. Seriously, I mean, whenever the market is moving with big moves, the volume is always a little bit animated. So I know the day is not over, but you know, the market is closing in 2 hours and we still have this very, very low volume on a quite brutal day, guys, minus 5%. So this is only telling me that, guys, what is happening right now is only traded by a few investors. So most investors, they just wait, all right? They don't want to trade this market. Whatever the position they have, is just bulls are, you know, holding the ground and bears are holding the ground. Bears are actually taking some ground. But whatever, we're still bullish on the long term, guys. We still have this very low volume that is easy to, I would say, go against whenever bulls gonna decide finally to buy this market, which once again is probably gonna come from some macroeconomics reasons more than AMC or GME. So GME is still looking good on the long term. We have reached this area that I think we needed to go to find some buyers waiting here probably. So not sure they're going to step in today or tomorrow. I would prefer, to be honest, to close above that 130 level on the daily time frame. In the same way, I would prefer we close above 16.3 on AMC. But once again, we've seen those fake outs many times. I'm not too worried when I just look at GME. What is worrying me, guys, as you know, and unfortunately AMC and GME will follow if triple Q tanks. All right, so let's discuss that a bit, guys. So let me quickly remind you guys the situation. Let's take even a bigger step back, guys. Okay, I just want to show you. I remove all my drawings. Bam. You know, I just want to show you guys that we've been correcting for the first time since March 20. So it's, I would say, something that the market needed to correct. We have, you know, everything combined for this correction to happen. We have the rates going higher. We have a war. We have a weaker growth. We have the COVID that is spreading again in China. And we have, of course, the inflation that is actually the reason why the rates are going higher in this weak growth environment. Usually when the growth is weak or expected to be weak, the Fed is keeping the rates low so that the economy can sustain and keep developing. But now they have no other choice than just increasing the rates to tackle inflation. And this is the first time we're in this situation for quite some time, guys. So yeah, what I wanted to show you is that this correction was kind of expected, and the question we're having is where this can go. All right, and since we have the breakout that is here, guys, clearly identified once again, this was the signal for me that things are bloody. I posted an alert right away, guys. We made some good money here in this whole move down, guys, hopefully, because I can tell you that I didn't make good money on the rest of my investments, but this play saved everything, because once again, this is a protection that, you know, we can trade against our long position. This is what I've been doing. I'm still short on this market because I'm long on different stocks. Rather flattish right now in this environment. I don't have a short position. I missed to create a real short position, which means that my short on triple Q will be covering the losses plus making profits of the losses of my other investments plus making profits. I missed this trade because 338, which was the support level that I told you guys, if broken, will give us a move down. Usually those supports after being broken are retested. Here we didn't have the retest. It's not the usual way things happen. Usually I would say 80%, 70-80% of the time we have the retest. But in terms of risk rewards, guys, what I've noticed is that it's better to wait here than just selling here, because the risk reward, you're gonna miss it sometimes like I did here, but most of the time the risk reward is gonna be better if you just sell on the retest with the stop loss just higher. So this is what I tried to do. I missed it. So today in my Discord I just said, for those who are really short, you can buy 319. Why 319? As you can see, because it's the trend line that fits the best the recent lows. And so sorry, 318, not 319. And we went today to 319 and we have a little rebound, but I would personally not build a long position here. So as I'm rather flattish on all of my investments, I would just do nothing here. All right. And what I'm afraid, guys, given the strong moves that we are seeing for the past 2-3 days, is that we are accelerating on the downside. All right. So this is one scenario. If I only look at triple Q, guys, is a little bit the most likely scenario. I gave you here some probabilities. So the more we go lower, the lower. So this was a probability I gave whenever we broke out here. So I said that moving sideways is the most likely scenario. But of course, the lower we come here, the higher this probability gets. So right now, I don't know what's going to happen. I will personally not buy 320, 318. I will take a little bit of profits here at 308. And I'm afraid we go there, guys. Let's be honest. And once we are at 280, then I will start buying, like really buying, all right? Not just taking profits on my short position, but buying. And why 280, guys? 282 because yeah, it's the 1-to-1 projection. Is it? What's that? No, it's not the 1-to-1 projection. Why 280? I have here some reactions and it's probably coming from something else. Let me measure here this whole move up, because this is what we are correcting, right? So we can apply the same method. Okay, so as you can see here, 315 is the 38.2%. It has been reached already. So this correction could be over because a correction needs to go at least to the 38.2%. But most corrections, they go to the 50, 61.8 only on stocks. On the global market, we don't see often 61.8. But so here my take is that this correction is going to be a little bit deeper. So the 285 area is the area that I think we're going to. And in this area, the best support I found was 282. So this is the reason why 282 is my target for this correction. And we are just heading towards the most likely scenario, once again, that I have presented, guys, a very long time ago, is a massive WXY complex correction that is going to last a few more months. Bam, WXY, okay, and that in June, July, we then finally have this really, this bounce on the global market. So this is unfortunately my preferred scenario from here. I still have some hope that we move sideways or even are bullish and make new highs quicker than expected. But for now, this is more looking bearish. In this situation, of course, AMC and Gme will drop a little bit more and we will only have a strong rebound happening in June, July. So we're going to analyze that. For now, as long as we hold above 320, 318, which is the recent low, I mean, there is a case for bulls to, take back control. Let's be honest. But as you guys know, the more a support is tested, the weaker it gets. It has been tested once, twice, 3 times. It's been the 4th time we're getting here. So I'm a bit afraid we go through that level in the coming weeks. But for now, once again, we are coming close to support, so we can hope for a rebound. And if we have this rebound, then very likely AMC will finally break out here. All right, so I'm monitoring that because we're gonna have one shot here, and the next shot is gonna be here and then here. So each time we're gonna be close to these areas, it's going to be a nice opportunity for the global market to rebound, which means it's going to be a nice opportunity for bulls to take back control on AMC and GME. And whenever they're going to take back control, finally, guys, they're probably going to take some nice ground, and we're going to have a nice rebound. So this is what I'm going to try to trade personally. And to conclude, guys, of course, we keep an eye on the US 10-year yield, because I told you guys that, you know, this is representing the inflation. This is also representing the expected returns of business in the next 10 years. So it's basically, the higher it is, the tougher it is for equity to outperform this rate, right? So if it's very high in an inflationary environment, which is the case, this is not good for markets. And right now we had a breakout on the weekly time frame above this 285 level, and we don't want this breakout to be confirmed. Once again, this breakout occurred without any consolidation, so it's very likely that bears just attack it and that we get rejected. If we see this kind of move, this would be very good for the global market. So I expect this is the scenario. For now, it's pretty good. We can see it's stabilized. But this Friday, guys, because this is a weekly time frame, this Friday is going to be very important for this breakout to be validated or not validated. I mean, confirmed or not confirmed. Yeah, and that's pretty much it, guys, for today. Thank you very much once again for those who have watched the video I made on Skylandia and who gave me a like. Only 50 of you went there, but it's still helping me. Thank you so much. This Sunday, guys, I had a collaboration with a big NFT project, so I'm going to make a video about them, and I really want you guys to go watch this video. So get prepared, it's going to be this Sunday. I told the project that I'm gonna have around 500 to 1,000 views. So I need at least 500 views. Once again, guys, this is gonna be good for the Crypto Bull project because it's gonna help me to collaborate with other big projects. And once again, guys, as Trading Senses members, you can join the Crypto Bull project and get the early bull role, which is gonna give you access for the best price to mint the NFTs whenever it's going to be available within 1 or 2 months maximum. I'm going to explain better what actually we're going to do in Crypto Bulls, but guys, we are making something totally unique and very serious project that I'm working on with some very strong people that help me in this project. So I'm going to tell you more about that. Once again, thank you very much for those who have liked the video yesterday. I asked you to. For those who haven't, go. It's still helping me if you do it today. And I count on you guys on Sunday whenever I'm gonna post the video about the collab, which is the first collab I'm gonna make with another NFT project. So thank you very much for watching, guys, and please give me a like if you have not liked this video already, so you're gonna be the first to know when I upload anything new. And stay close to shore. I see you guys.